The CoinGecko podcast is sponsored by eToro. Here's a short blurb about the services that eToro provide.
Meet Chris and Mark. They've both heard of Bitcoin and Ethereum. But while Chris is using eToro to trade top cryptocurrencies, Mark keeps getting cold feet. Chris uses eToro's simple and intuitive platform to build his own crypto portfolio. And Mark is still waiting for a sign. Chris follows and connects with other experienced traders on eToro. Mark is following the advice of Eugene, a friend who prefers to keep his money where he can see it. Chris uses eToro's copy trader to automatically replicate the portfolios of leading traders in real time, while Mark is still searching for answers. Do you feel like a Mark? Join eToro and gain the confidence you need to trade crypto. eToro. Sign up for free.
Welcome to the CoinGecko podcast. For today's episode, we have Oliver Xie, founder and project lead of InsurAce, a decentralized insurance protocol. If you're watching this video on YouTube, we at CoinGecko really appreciate it if you hit the subscribe button below and follow us. A little bit about Oliver before we start this podcast. Oliver started work on InsurAce back in September 2020, and prior to that, he was working as a CTO in one of the three largest Singapore-based licensed derivative exchange and clearing houses. Oliver entered the crypto space back in 2017 when he led a team to research crypto derivatives and blockchain technology and has gravitated towards blockchain-based open finance for the past few years. He identified an opportunity for a unique approach to providing insurance for DeFi smart contracts and users, and InsurAce was created. So very good to have you on the show, Oliver. I remember meeting you back in Singapore a few years ago when you were back in your previous job at the exchange. So very happy to see that you've transitioned fully from TradFi into DeFi. So very happy to have you on the show, Oliver.
Thank you, Bobby. Thanks for having me today. It's really been a pleasure to be here on CoinGecko, and hope we can have a good session today to share all the things about InsurAce and share the things in the industry. Thank you, Bobby.
Yeah, I'm sure we have a lot of things to discuss and learn. So I guess to start, right, Oliver, maybe you can give us the listeners here at CoinGecko podcast a simple explanation of what do you do, what is InsurAce, and what do you do at InsurAce?
Yeah, sure. So probably you guys can just tell from the name InsurAce, you can see that this is actually a DeFi insurance protocol. So definitely there are many different sectors in a DeFi space. There are lending, borrowing, there are decentralized exchanges, there are yield protocols. But what we do is on the insurance side. So to put it simple, InsurAce is a DeFi insurance protocol. We aim to provide reliable, robust, and carefree insurance services to all the DeFi users. So basically, we offer insurance services to cover a wide array of different risks, such as smart contract risk, the centralized exchange custodian risk, and recently we add in the ideal event risk. So all these risk coverage are based in a multi-chain context. So our unique product are the portfolio-based coverage, and also we are going to launch the investment portal soon. So with all this together, we're going to offer a DeFi insurance protocol with the investment capabilities. So basically, that's what we do from the product side. And also in terms of our investors, we are backed by Defiance Capital, Parafair Capital, and also Alameda Research, Hashkey, and a few top other in top crypto funds as well. And our community is very strong. We have one of the best communities, and we will continue to provide service and innovate for our community.
That's amazing to hear, man. Before diving further into InsurAce, right, I would like to learn a bit more about your background, right? So when I met you a few years ago, you were the CTO at one of the largest exchange and clearing house in Singapore. I mean, it's a pretty good job in the traditional finance. I know you were interested in crypto back then. That's the whole reason why we met. But how do you end up making a move to crypto full time? Why do you do this? It'll be interesting to hear your personal story on this.
Yeah, sure. I think the time we met was like back to 2017. I think that was the first time when Bitcoin hit like 20K. that also, you know, lead the Bitcoin and Ethereum out of the crypto space into the eyes of the mainstream. You know, so from there onwards, since I was working in a traditional regulated exchange, so we have to, you know, pay attention to those new trends in the market. So I need a team there, you know, to start working on research on the crypto assets and also the blockchain technology. And in the past few years, we were trying to bring the cryptos into a regulated environment, but due to various kind of reasons, it wasn't, you know, eventually, you know, come true. But during the process, I learned a lot of the, you know, knowledge about cryptos and also blockchain technology since I was a CTO, and also I know get to know a lot of friends in the industry. And eventually, I really, you know, find the kind of passion that in the crypto space and also the innovation. So as a technology person, you know, I cannot help myself, you know, just keep working on the, you know, cryptos and blockchain technologies, and seeing how blockchain technology, you know, can come to you know, influence the traditional financial industry. And back to last summer in 2020, when the DeFi summer begins, you know, it was really opened a new door for every one of us. You know, so there are various kind of new finance applications, and it was really, you know, bringing real values into the financial services. So that actually, I think, is a good combination of my personal passion as well as my expertise. So from there onwards, I was, you know, really kind of involved into DeFi, and eventually I think I found that maybe it's time that for me to, you know, to start full time and build my own project.
Yeah, that's good. That's a good story to hear, man. Like everyone kind of get down the rabbit hole. Like once you start going into crypto, you realize there's so much innovation and how fast things are moving. And then you know, back in your old job, like corporate setting, like it's really hard to get anything out. So yeah, just DeFi just moves in like dog speed world, like dog speed. Yeah,
exactly. Yeah.
So yeah, let's talk a little bit about the insurance product that you launched, InsurAce. You launched it on Ethereum recently. I'm not so sure when exactly that you launched, but it would be interesting to hear. And how's kind of the initial traction that you have so far on this mainnet product that you have launched so far?
Yeah, we launched our Ethereum mainnet back to April 26th. So our first launch was on Ethereum mainnet, and currently I think it's around 1.5 months away. So during this period, we have our product has been, you know, developing very fast. We offer, you know, multi-chain insurance and also IDO insurance, and until today, the total cover we have sold is around 22 million, and we have earned around 70K of total premium, which looks like, you know, still a very small amount, but I think we are, you know, growing very fast. We're working on right, you know, direction. So that's pretty much what we have achieved so far on the product side. And also, I think I forgot to mention that we actually currently we have provided coverage to over 40 different protocols, some of the big protocols, some of the new, and some of the small, medium camp, you know, protocols. So I would say we are gradually becoming one of the most comprehensive insurance platform in the industry.
That's good to hear.
Yep.
So, I mean, you mentioned that you guys recently have about $22 million worth of active cover so far in about 1.5 months since you guys launched. I guess the biggest insurance provider in the space is Nexus Mutual. The last I checked, they had about $620 million in active cover amount. So that's kind of like about 30 times larger than you. Obviously, they've been around for the last 2 years. But I'm interested to hear from you, right? What do you think is the biggest differentiator or the maybe competitive advantage that you may have over Nexus Mutual?
Yeah, sure. Yeah, and this basically, I think Nexus Mutual is still, you know, the leading player in the insurance sector, and we definitely respect them because I think they have made many, you know, starting moves in for the insurance sector, and many of their practices I think have been adopted by many, you know, subsequent followers. But again, I think we are still have a lot of unique value creations we have compared to them. First, the unique portfolio-based coverage. So basically what Nexus Mutual provide is a single protocol-based coverage, whereby, let's say, Bobby, you have a big bag of different crypto assets, but let's say you want to get insured. So each time you have to insure one of your assets or one of your DeFi, farming protocols. But let's say what we can provide is a portfolio-based coverage. So that means that you can cover a basket of different assets or DeFi protocols in one shot, which will save your operation time, save your premium, and of course save your gas fee. So that's one of the unique operation advantage we can offer. And then second one is our mining program. So what we do is an aggregated pool of staking, and whereby Nexus Mutual is a per protocol pool. So definitely they have their advantage, but what we can offer is, first one is higher APYs plus in higher bigger capacity for insurance. So let's say if you use Nexus Mutual product, you'll find that for many of our protocols it just doesn't have enough capacity. That's because their staking pool is separated. Each protocol has its own staking pool. But on our platform, we're an aggregated pool whereby we share the capital among other protocols. And so that in that way, users will be easier to just to stake in, and they do not need to care all the details at the back end. Or at the same time, they can enjoy the APYs. And also at the insurance side, every protocol will have a much larger capacity. So I think that will eventually benefit the users. I think the third one is that we will have an investment portal, which the investment portal and the insurance portal, will work together in a synergy. So the insurance, the free capital in the insurance side can be used to invest in the investment side, whereby the investment side, since we have the investment returns, will come back to insurance side, to further subsidize the users there, offer higher APYs. So these two arms are, working in a quite sweet synergies there. I think the last one is more on the token side. So I believe you guys have seen that Nexus Mutual has a bonding formula for their token price.
Yep.
And also they have a membership. So you have to do KYC, and whereby definitely for us, we do not have KYC, and their tokens can only be transferred among the KYC memberships. But for us, we do not have such kind of restrictions. So our tokens can be traded more freely and can be listed on exchange, can be transferred among the token holders more freely. And so that's pretty much, I think we are providing a more open, more inclusive way of doing insurance. Yeah, I think these are some of the key differentiators we have.
It's interesting how you mentioned how, like, in Nexus Mutual, users have to stake individually for each different product. So they have to stake for Yearn Finance, for Alpha Homora, for Binance, for Coinbase, and then the interest rate on the premium on this product goes down as more people stake. But what ends up happening is that there's not enough people staking it because the premiums are low enough, and so there's not enough capacity. Whereas you guys take a more portfolio based approach, and there will be capacity. So I've got a few questions coming on from there, right? So, and then you also mentioned that on Nexus Mutual, you got to buy insurance for each protocol specifically. So you got to buy insurance for Yearn, you have to buy insurance for Alpha Homora, Badger, and so on. But so you're saying that on InsurAce, if I were to buy insurance, I just have to decide, like, I want to buy $100,000 worth of insurance for 1 year and it covers all these 40 protocols, or do I have to select the protocols that I want to be insured? Like, say I would like to have 5 different protocols, and then it calculates a price for $100,000 premium for a year, for example.
Yeah, so for the portfolio-based coverage I mentioned, so portfolio means that you can select either one or multiple. So it doesn't necessarily need to select all the 40 protocols as a combination, but again, you can choose one protocol, like Yearn protocol, you can just insure for it. At the same time, we have the flexibility that you can insure for multiple protocols, Wi-Fi plus Curve, because these are good combinations together. And also, let's say you want to insure Alpha Homora, because Alpha Homora has different versions on BSA, V1 on Ethereum, and V1 on BSA, and V2 on Ethereum. So they have different versions on different chains. So you can also put them as one portfolio and insure them together. So portfolio is more flexible. Yeah.
And would it be like, say, like, for example, the lowest rate on Nexus Mutual is 2.6% for like the safest protocol, right? So if you were to buy two protocols, you have to pay 2.6% and 2.6%, which would be roughly 5.2%. So would it be correct to say that on InsurAce, if I were to buy a portfolio, like two portfolios, it would be cheaper than on Nexus Mutual? Or
yeah, definitely. Yeah, that's one of the major benefit of a portfolio-based coverage. Of course, first one is that you can cover multiple protocols in one shot, but on the pricing side, you will enjoy much cheaper premium overall. Let's say you got two Curve and Wi-Fi, each one of them is 2.6%, but these two combined together, they can save around like 20% plus of premium. And also, and then don't forget about the gas fee. So if you buy it two times and instead of just one transaction, so that will actually save a lot of cost for you. Actually, personally, we did a comparison that let's say if we insure around 4 to 6 protocols altogether, and these are all the big protocols. And so in that way, we can save around at least 30% of all the premium. But let's say if we put in some new protocols, because normally the new protocols are, more risky, right? So their premium is kind of higher. But let's say if we put some of the low premium ones, the higher premium ones together as a portfolio, then you will save even more premium. So that's one of the major advantage of the portfolio-based coverage. Yeah.
So educate us, enlighten us, right? So what are the kind of premiums that we can kind of expect for one protocol coverage on InsurAce at this point in time? Like for the safest one, let's just say, like, I don't know what's the safest one, maybe Yearn or Badge. I don't know. Yeah, maybe you can tell me about.
Yeah, for these ones like RV, like Wi-Fi, they're basically around 2% or 25%. That's the lowest. Yeah, but if you put them all together as one portfolio, you definitely get much cheaper premium. Yeah.
So I was looking at your mining portal as well. So at this mining portal, you accept ETH, WETH, USDC, USDT, among other things. The interest on these things are roughly around I saw about 14% for WETH and about 11% for USDC and USDT. I was reading it. There was a disclaimer at the bottom in the sense that if there is a hack on one of these protocols, basically the people who mine or stake their ETH or the USDC might see them having a haircut on it, right? Because you are basically insuring the other users who are buying premiums on Nexus Mutual. Is that correct?
Yeah. So basically, this staking will come in, to underwrite the insurance risk. So let's say if there is a claim payout happens, so we will, take a portion of these funds from the staking pools, for the claim out. At the same time, we have another, tranche for the claim payout, which is from our premium pool. So we will use the premium pool as a first tranche for claim payout first. If that's not sufficient, then we will come back to use the staking pool for claim. Yeah. That's pretty much how it works. Yeah.
But the premium would not be much, right? Because the premium will accumulate over time and then you go to a pool. But if there's not enough, then those who stake may see them getting a haircut, right?
Yeah, we get a haircut. So that's why we keep reminding people of this risk. But just because recently the whole market just plunges, so like ETH, like even our tokens, the prices drops a bit, so the APY drops a bit. But personally, we can offer around like over 30% of APYs. So in this way, we can we can provide higher APYs for stakers to make sure that they are comfortable to stake in. Yeah,
I think for the ETH one, off my head, about 15%. 11 to 15% ETH, WETH coverage. I think that's fair for ETH, but for USDC, USDT, I think that's going to be challenging to attract capital, right? 11% for USDC, USDT. A lot of people can get 30% stablecoin returns and even higher, especially if they move to Polygon. So I don't know if you face any challenge getting capital from people to stake in stablecoins.
Yes, I would say there's definitely a challenge. So of course, in a vast DeFi space, there are definitely a lot of crazy APYs, several hundred of APY, and 30%, 50%. That's very common. So that's why. But in our philosophy, we think that crazy APYs is definitely not sustainable. So we're definitely not going to offer very crazy APYs. But again, what we want to see is that we'll offer a competitive APYs to the users, so that they're willing to stake in. At the same time, once our premium pool grows, we will definitely share a portion of the premium to these people who stake in. So that will create extra yields. And plus, let's say in the future, our investment pool investment arm launches, that will create another source of returns. So all this combined together, it will definitely offer higher returns. And also the premium return and the investment return, I think they are kind of sustainable. So because let's say if you're just reward the token, the staking with your native tokens, but eventually it's you will fall into a dilemma. If the more tokens reward, the higher selling pressure in the market. But again, your prices drops, you'll have to offer more tokens, right? So this will create quite a negative loop. So eventually we'll have to sell up more covers, get more premium, and build up the investment portal, get more investment returns. All this combined together, we can offer a pretty APYs to the users.
So let's it's kind of a good way to segue into the investment portal, right? So you mentioned that there will be an investment portal. Maybe tell us a little bit more on what is this investment portal, when will it be launched, why is this important in the InsurAce product offering?
Yeah, sure. So not just for DeFi insurance protocol. So even in the traditional insurance industry, many of the big insurance companies are actually heavily relying on their investment capabilities. Like Warren Buffett is a good example. So for us, I think the mechanism is similar, that there will be some free capital which is reserved for your claim payout, but at the current time you may not really need it for this part of capital. We call it the free capital. So we can use a portion of this free capital for investments, whereby we can investment. I think the current investment were mainly in DeFi space. So with these investment returns, it will come back to supplement the staking pools. Another product design we're going to have is an integration with other yield protocols. Let's say there are a lot of yield protocols in the market, but instead of users to invest into the yield protocols, at the same time they buy an insurance. So why not just stake or buy the investment products from our portal? At the same time, we add a built-in layer of insurance, so that what you invest in is kind of protected already. So I think that's something we're going to provide as well. Yeah. So these are things about the investment portal.
So that's interesting, right? So instead of me kind of going to Yearn Finance YFI and putting in my USDC or my YFI or whatever tokens to the U aggregator, and then having to go to Nexus Mutual or InsurAce to buy insurance on top. I mean, if I want to have some protection, you're saying that you can kind of stake your stablecoins on InsurAce investment portal, earn a yield on it from YFI, and then have the yield protected with insurance as well at the same time.
Yeah. That's something we are going to build for the investment portal as well. So eventually we wanted to build the investment portal into a secured as a yield entry for the DeFi space. At the same time, once we have that APY in place, even other protocols like Dapper or like InstaDApp, they can actually come back to integrate with us, integrate the insurance service into their the app as well. Yeah.
So I'm curious to hear your thoughts, right? I mean, a lot of these DeFi protocols launch, and a lot of this new one could be a bit risky, and when people put their funds in these protocols, there's always no insurance by default. Do you see a future where, or do you see yourself doing partnership integrations with DeFi protocols where from the get-go, from the beginning, every user who participate in this new DeFi protocol is already insured 100% with InsurAce without having to purchase extra insurance?
Yeah, I think that's something, as I just introduced. That's something we wanted to build want to build and secured, a DeFi entry, so that every time you come in, you can, of course, there are other entries. You can come into DeFi, but it's not insured, it's not secure. But you can come where our portal. At the same time, you can get an insurance service built in. So it's just like sometimes when you are taking a flight, right? So you can either choose to take a flight insurance, or you do not. But most of the time, I think everybody would just by default, they would just choose to buy the flight insurance. So in this way, I think it's similar. So every time you come into DeFi, there might be an option. Hey, you want to get insured? If you tick that box, then again, along the road, you're getting insured. And the key thing is that we need to make this affordable. Yep. So let's say if people feel that, well, this is so expensive, I mean, let's say if I get 10% of APY, then have to spend like 5% for insurance, I think people will not be willing to take it. But let's say if I get 10% or 15% of APY, at the same time the insurance cost is like 1% or less than 2%, then people are saying, hey, I think that's doable, because my APY 10% minus the 2% of insurance cost, I still got 8 APY, but it's secured. I think people will be very happy to take that. At the same time, as for us as an insurance protocol, we set up the more covers. We provide real values to the users. So that would be a mutual beneficial way to build. Yeah.
I like how you describe, you compare the insurance in the airline purchasing, the flight purchasing process, right? It's like you just take, do you want to purchase insurance? Yes or no? I mean, from the airline's point of view, especially for low cost airline, that's a massive revenue generator for them. Some users who wants cheap, you just remove it. It's up to the user to select, but it makes it really simple. Like it's just a yes, no, do you want insurance? And they all bundle in together. So yeah, I can kind of foresee how this will be part of like DeFi in the future. So if you have a partnership with Aave or Compound and just take and then like, okay, you get an insurance on top of your deposit, and they just deduct like 1% of it from any yield that I get. So yeah, that's an interesting one.
Yeah. I think that's why I personally always say that insurance is actually at the infrastructure level of DeFi. It's at the bottom of the whole logo. So eventually, I think everyone who comes to DeFi will need an insurance, whether they like it or not.
Yep.
But we're definitely subject to the users, their choice to use it or not. But it's still there is still that demand there. Yeah.
Yep. So one of the things that I was reading up is that you guys at InsurAce are planning to have a multi-chain insurance service. So you have your mainnet on Ethereum, but you guys are also planning on BSC, Solana, Phantom, Hecko, Polygon. Tell us a little bit more about this multi-chain and how will you sort of work? For example, if you buy insurance on Sushi and SushiSwap is deployed onto a few different chains these days, so do you get insurance on the Ethereum, Polygon, Phantom chain, or is it just on one chain?
Okay, yeah, sure. So basically, I think the multi-chain is one of our strategic direction we are developing right now. So we are developing this in 2 phases. For phase 1, it's more relying on our current Ethereum deployment, but we're providing coverage to other chains. This is what we already went live in May. So let's say let's say currently we're on Ethereum, but let's say if you want to buy coverage for your protocols on BSC, on Polygon or Phantom or other chains, so you can buy it from our Ethereum D app. I think that's a stage 1. For stage 2, what we are going to is offer the real cross-chain deployment, and our BSC deployment is in this week. So we're going to launch our BSC version this week. So after that, on any chain, as long as we have a deployment, you can always buy the insurance for your protocols on other chains. So that will be the next step. So after this week, after we launch the BSA, I think the users on BSA can buy insurance for other chains as well. Yeah, so let's go back to your question about Sushi, right? We definitely think about the, let's say you buy an insurance for Sushi and it covers all the deployments, no matter which chain Sushi is going to be. But eventually we make it separate. Let's say you want to buy sushi for Sushi Polygon and Sushi Ethereum, you have to buy it separated. But of course you can always buy it in a portfolio. The reason here is that we think that the security status, the tech stack, different chains are kind of different. Let's say the tech stack on Solana is very different from the Ethereum, the EVM based attack. So that will result into different security status. So eventually we think that we need to separate the insurance to based on different chains.
Okay.
Yeah. So that's why we offer. I think that's also a good integration with our portfolio-based coverage. So you can always buy the buy SushiSwap on different chains, but buy them in a coverage if you want to cover all your risk. Yeah.
And so, but at this point in time, if I have to buy SushiSwap on InsurAce, it covers all the deployments, or
no, you have to buy it separate.
Okay.
Yeah.
And I'm just curious, right? Talking about the portfolio deployment, right? So let's say I purchase a deployment for SushiSwap or for Ethereum and for Polygon, and let's just say like I don't know and I purchased these for 1 year, and let's just say 3 months later, SushiSwap launched a deployment on Solana. Is there a way that I can sort of edit my portfolio? Maybe I would like to remove Polygon and swap it with Solana for my insurance and kind of keep roughly the same premium that I've already paid.
Currently, we do not have this function. Yeah, but honestly, yeah, but we do have received such feedback from our community. Let's say some people have bought coverage for 2 months. Then after 2 months, they want to extend their insurance, or they want to actually swap. Let's say personally they're buying for Wi-Fi. Then after a while, they want to swap their Wi-Fi to Curve. So this really happens. But currently we have not developed this function, which we call it the cover amendment. So you can extend, you can cancel it, you can add in new covers, or you can swap it to other protocols. So I think this is something we're going to develop subsequently. But at this point of time, we haven't provided this yet. Yeah.
That would be quite a game changer, I would say, because then from a user's point of view, I don't have to end up paying for extra insurance that I'm not utilizing, right? So I could be farming on Compound, and then I just have insurance on Compound, and then I switch it to Aave or Wi-Fi later on when the need arises. Just have to pay the gas cost, right? But yeah, it's interesting. What are the other things that you recently done as well was you've kind of launched an initial DEX offering cover with Dora Factory. Tell us a little bit more about this IDO cover offering with Dora Factory.
So maybe you can remember that back to March, there was an security hacking to one of the IDO platforms, which maybe it's not good to mention the name, but there is definitely such kind of incident. So the IDO event risk we offer is similar. So we are trying to secure the whole IDO event, no matter it's not for 4 hours, 8 hours, or for the 8 hours. So the IDO event risk is to covering the security risk during the whole IDO event. Let's say the IDO platform got hacked, or there is some smart contract vulnerabilities in the IDO platform and caused the asset loss to the project teams. So where the IDO event our insurance is to cover this type of risk. So this is one of the functions. Second function is that for some of the new protocols, I think for most of the projects to do IDO are new projects. So if we come in as an insurance provider, then this will kind of help them to enhance their user confidence and help them to grow their business. So there are basically 2 functions. One is to cover the security risk. Another one is to kind of endorse the project. So in this way, we are actually helping the small or new projects to grow. Yeah, this is about the IDO event risk, the insurance. Yeah.
You guys are pretty new, so there hasn't been a claim event on InsurAce yet. And I guess for any insurance provider, that's something that the community always look forward to see if the insurance actually works or doesn't work, like whether it pays out or doesn't pay out the insurance that has been purchased. So I'm just curious, right? Let's just say there's a hack that happened on one of the platforms one of the protocols that you cover, and I sort of purchase insurance on InsurAce. Say, what would be the claim process like on InsurAce, and how do I go around submitting my claim for the insurance that I purchased?
Yeah, sure. So after you purchase the cover, right? So if during the cover, active period, so if there is any hacking event happens, you can always submit a claim request from our DApp portal, or even after, even during 30 days after the cover is expired, you can still submit a claim request. After the platform receiving the claim request, then there will be a advisory board. The advisory board, it will be consisting of people from technology, insurance, or legal compliance. They have this type of expertise. They will investigate into the claim request to verify whether this really exists, this really happens, there is really this amount of loss or not. So they will come in to investigate and verify the claim request. After that, they will have a reference proposal for the community. Then community will come in to vote, based on their reference proposal. So again, here the advisory board is not making decisions directly. Instead, they're just investigating and provide a reference proposal. So because we think this is very necessary because of the complexity and sophistication of the hacking event. So most of the time, if you just let community, solely decide on this, there might be, easily lead to some, misjudgments. But again, if we need to have some investigation first, then community can come in to vote on this. So this is pretty much how the claim works: advisory board plus the community voting. Yeah.
Do you need to suffer 100% loss to be able to redeem, to submit a claim, or even if it's a 10% loss and you can submit a claim? I know there was an incident a few months ago where YFI was hacked, and then they reimbursed all the users who got hacked. So everybody was made whole, but some users purchased insurance and the insurance payout as well. So what would be the situation, or what would happen on InsurAce if such a situation were to happen again?
Yeah, understood. Because I think personally, some people bought insurance on Nexus Mutual. So Nexus Mutual actually has a criteria that you must suffer from a substantial loss, which is 20% of your insured amount. But let's say that actually leads to an issue. Let's say I just suffer from 10% of my loss. Shouldn't I just got claim? So for us, after our thinking, we do not have set this kind of limitations. So instead, once you got any amount of loss, you can always submit a claim request to us. Of course, I think this will increase the operation burden for insurance. But again, I think it's actually good for the users. Yeah.
And what about what happened if there was a hack on Yearn, but the user did not suffer a loss? So funds were drained, but the team sort of covered back made whole on the loss. So from the user's point of view, there is no loss, but there was a hack incident, right? So would you pay out like for the YFI case?
For us, we'll still pay out.
We still pay out.
Yeah, because first is that the user really suffer from this loss from the hacking event. It applies to our insurance scope. So at the same time, I think the compensation they got from Wi-Fi is their portion to pay. But for us, we have this responsibility obligation, to pay to the users who bought our insurance. So I think it's not really correlated. Yeah.
And recently there were a lot of hacks happening on the BSC, and it's interesting that you guys are looking to get onto the BSC space. I don't know if that's a good thing or bad thing, because there's a lot of hacks on BSC, but it also makes BSC safer. A lot of projects were kind of anonymous in the BSC. I guess there's a few questions here, I suppose, right? So how do you evaluate what projects or what protocols to be added to your list, especially in BSC, where so many anonymous, so many rug pulls happen? And I guess to prevent this, right? I mean, some projects can sort of get audits by insurance, post up bug bounties. What do you think is like the most effective way for projects to kind of stay safe, I suppose?
Yeah, sure. I think although BSC recently have a lot of security incidents, and many of the projects are anonymous, but eventually we have a risk assessment process. So the project teams will need to answer like 40 plus questions to provide various kind of information to us. And then after that, we will run a very rigorous risk assessment based on this information collected. So after that, we will decide. Currently, this is kind of a little bit of a centralized decision making because we haven't, run too much on the decentralized, voting process yet. But we will, make a decision whether to list this protocol or not. At the same time, if we are going to list, what's the basic premium level we're going to have. Because I think for insurance, it's always about pricing of risk, trading of risk, right? So for some of the protocols, let's say they are highly risky, then you could always impose higher premium level on those protocols. Yeah. So I think one of that's one side of the thing. Another side thing of is that I think for BSC, they still have a very good ecosystem, a lot of projects there, a lot of users there, and especially the huge traffic that Binance can bring in. That's actually good for project teams, to grow on BSC. So eventually we still made the decision to to develop to BSC, and it's launching this week. So we hopefully, I think after we launch the BSC, we will get more users, more coverage there as well. I think it's just that there are so many hacking events on BSC. That's why we should come in to make a play. We should come in, to protect the users. Yeah, if everybody everywhere it's safe everywhere, so there's no value for us to exist, right? Yeah. Yeah. And I think back to the question you ask about, like for the project team, they can do audits, they can do bug bounties, and also they can buy insurance. So I think there is a saying goes like, you would always need to work for the best but prepare for the worst. So I think measures like you do bug bounties, you do audits, these are the things you need to do to work for the best. But insurance is what you should to do to prepare for the worst. Let's say the worst case happens, your protocol got hacked, auditors will not be responsible. They never currently all the auditors, I haven't seen anyone take an obligation towards their auditing, or the bug bounties, they do not take effect when there's a hacking event. Only insurance will come in to compensate your loss, to save your day. So I think that's something the project team need to consider. Always work for the best but prepare for the worst. Yeah.
I think that's a very good advice, I would say. So yeah, I think we're kind of running up to the end of the podcast. I think one last question that I have for you is basically any interesting upcoming plans for InsurAce this year. I mean, you've sort of mentioned some of them already throughout the podcast, but maybe you can kind of sum it up, or any other things that you haven't mentioned yet would be interesting to hear from you.
So basically for InsurAce, we'll continue to just shape up our product. So there are a few directions. One is a multi-chain, which we're currently developing. So we're going to launch to BSC this week. And actually Heiko is coming very soon. We have built an in-house bridge for people to transfer insured tokens among different chains very conveniently. And also we have participate in the Solana hackathon. So Solana is one of the chains we're going to touch next step. So I think for multi-chain, that would be the next chain for the crypto space. And the second one is a B2B insurance. So apart from the insurance services we offer to the users, to the DeFi users, I think we're also trying to expand our B2B business so that we can offer insurance, work more closely with the project teams themselves. Because this is why we call it B2B, is that I think the insurance demand from project team side is more diverse. They could have different demand for the insurance, how it works, what's the cost they want. So that's why we want to make some more customized, tailored service for the project teams. So let's say for some of the new project teams, if they can get some insurance, this will definitely boost their user confidence. Whereas for some of the mature big protocols, they always have this kind of insurance. Probably they want to have a larger capacity, because they have a much larger TVL to cover. So there are definitely different insurance demand from different project teams. So we're developing this type of B2B insurance to serve. And also the investment portal, as I mentioned, and I think the last one is a business growth. So eventually we did all these project developments, we did all this marketing, community building. Eventually we need to convert all this into our business growth, sell to more covers, earn more premiums, more investment returns. I think this is a way eventually we can create values to our community, to our users, and our token holders. Yeah. This is
Yeah, I think you brought up some interesting points on some of the plans, and I thought it was the B2B approach was kind of quite refreshing for me, quite an interesting deal. Because I mean, if you think about it, like we've seen a rise of DAOs. A lot of teams have, I don't know, hundreds of millions of dollars in tokens and in the DAOs, and these DAOs could be sitting on one smart contract, which can be good or scary at the same time. And if there's no insurance on it, some of them could want insurance on this smart contract. And some of them are, not just that they are actually diversifying that DAO and they're putting them into new aggregators and all to kind of get some revenue for the DAO. So I see how it can be a pretty big growth opportunity for you guys to focus on B2B. So that's definitely quite an interesting approach. And very happy to hear that. So yeah, I think we've reached the end of the podcast. It's been an interesting past 40 minutes or so talking to you. Definitely learned a lot of things about InsurAce. And thank you very much for taking the time and to explain things to us here on the CoinGecko podcast.
Thank you, Bobby. And I think thank you for offering this opportunity, to talk to your audience and explain about what InsurAce is, how InsurAce works, everything interesting about the crypto space. Yeah, thanks again. Yeah, thanks for the opportunity.
The CoinGecko podcast is sponsored by eToro. Here's a short blurb about the services that eToro provide.
Meet Chris and Mark. They've both heard of Bitcoin and Ethereum. But while Chris is using eToro to trade top cryptocurrencies, Mark keeps getting cold feet. Chris uses eToro's simple and intuitive platform to build his own crypto portfolio. And Mark is still waiting for a sign. Chris follows and connects with other experienced traders on eToro. Mark is following the advice of Eugene, a friend who prefers to keep his money where he can see it. Chris uses eToro's copy trader to automatically replicate the portfolios of leading traders in real time, while Mark is still searching for answers. Do you feel like a Mark? Join eToro and gain the confidence you need to trade crypto. eToro. Sign up for free.
This podcast is provided as part of the overall information on cryptocurrency contained on our website, is for your general information only, and does not howsoever constitute any endorsement, financial or investment advice, nor any solicitation or offer of securities or other financial instruments. CoinGecko and the podcast presenter makes no warranties, implied or express, of any kind in relation to this podcast, including, without limitation, the accuracy and updatedness of its content. All opinions and recommendations there in the podcast are based on the personal opinion of the presenter. Please conduct your own research and procure professional advice should you, at your own risk, decide to howsoever invest or trade in relation to the content contained in the podcast.
For the latest crypto prices, visit our website. If you haven't already, make sure to subscribe to our YouTube channel to keep up to date on the latest crypto trends.